All right, we are live. We're live. We're back. Josh, welcome to another session here of chatting about financials. Looking forward to this.
Yeah, me too. We're not trying to bore anybody here too, so we'll
No,
try and make it lively.
and we'll dive right into this because I think it's important, for anybody who's watching the replay to not just have a bunch of dead space at the beginning here. I am
Sure.
gonna just refresh here and share it into the group. But I'd love if you could, for those, let's kind of pretend we're hitting a new audience this time, because it may be exactly that, a new audience of people who are jumping in. If you could give, just a real quick summary. I know if you guys haven't listened to our one from last week, please, I'll tag that and I'll kind of do a running tag of all of these as we go along. So it'll be in the comments as we finish up this one. But if you could just give people a quick intro, real quick. Again, go to the last one if you want the full thing. But while I'm sharing this into the group, Josh is just going to share a bit about who he is and what he's up to.
Yeah, right on. Well, thanks for having me, Lewis. I appreciate it. It's always good to be here with you and just provide value back to the group, because I've been an entrepreneur for the better part of a decade. Have a degree in it, in new venture management from Northeastern University, and also marketing. But went through every trial and tribulation, just like every entrepreneur does, of thinking that I'm going to create this life of freedom by starting a business. And my business ran me for a number of years, and from almost going bankrupt to, eventually selling my servicing construction company down in Dallas, Texas in 2021. But traveled the world, worked in the Fortune 500s at Oracle and EMC, building data centers and selling data security. But I've been lucky enough and fortunate enough to have a lot of great mentors in my life, specifically my former business partner's dad, who really helped me learn how to maximize using financials to make better business decisions ultimately. And, he struck me with this one point that I'll never forget is, the output inside of your financials, any of your financial statements, is a direct reflection of your behavior inside of your business and, that of your teams. So it's just really important that every entrepreneur doesn't run away from them, but you don't have to be like a CFA, like a chartered financial analyst or anything like that, to use these. There are some basics that we can run through to help entrepreneurs, but also really, how do you leverage and maximize these to make better decisions inside of your business and generate profit, and stop thinking about your top line vanity metric of your revenue? Although that is important, it's what you take home at the end of the day.
It really is.
But I think you have my website up on here too.
I do, yeah. So if people want to connect with Josh, Mingma.io is his website, his software. He does, financial assistance, coaching, CFO work with companies. He's currently helping me as a fractional CFO. Him and his team. It's been really impactful. He was a coach, business coach, I would say, last year. Now kind of stepping more specifically into the financial side with me has been amazing. And that's why we're wanting to share this with you guys. So I think, Josh, you mentioned it there. You don't have to be a CFA. You don't have to be, someone really in the depths of the financial space, but you need to know enough about your financials to not be scared about it. Just like I recommend you know enough about your marketing to know, what you're up against, right? And is the agency that's working with you doing a good job, right? If you don't know your financials, it's just not good. And I want to tie that to something you just said there, which you said to me at the beginning, which hit hard for me. Like at the beginning when we started working together last year, you said you can tell a lot about a business and a business owner by looking at their financials.
Yep.
And I think business owners could tell a lot about themselves and see a lot, where habits need to be pruned, where things need to be adjusted if they took a good, honest look at their financials.
Yeah.
Do you have some anecdotes on clients without naming names that you could kind of run through? Because I think the stories are what really help people.
Yeah. Well, I'll kind of give like a framework on this of some of the things that I see most often that scare business owners and have scared me in the past is kind of looking at, well, not kind of looking at your bank account and measuring your self-worth off of how much money you have sitting in there. And that's a dangerous place to sit if you're anyone, because if you look at different industries out there, you look at guys that are big names out there, they may not be sitting on a ton of cash, but they have a ton of assets on their balance sheet, and they've got a ton of equity inside of their company. So what they're doing is they're deploying their liquid capital or cash, and in order to generate interest and like kind of passive income, I would say, while they're going out and looking for, new deals or new ways of generating more revenue. And then it's just like a big cycle, right? Where they have cash that comes in, they buy assets that sits on their balance sheet, they put it to work, and eventually, your business is the best asset that you can have. So you really want to be focused on generating more assets and, ultimately generating more equity inside your business, because you don't want to live in that space of saying, all right, well, my bank account was 200 grand yesterday. Now I'm at $5,000 today. What happened? You're paying off a lot of things. You're putting that money to work. You're investing in marketing or something that's going to provide those types of return on investment. And I'd love to see a lot of business owners be able to get out of that mental space that just, I think, puts us in a box and affects every single aspect of our life outside of what we do in our own companies.
It's inaccurate too. That was something that I looked at, is like, how much money is in the bank, what's there, but that's not an accurate picture of all the things that are happening in your business. You've got payroll that hasn't come out. You've been paid sometimes for work that hasn't been completed. There's all these different things. What if there's a refund needed or whatever? And it's a dangerous place to live, kind of propping yourself up on that cash when really the cash is useless until it's deployed to do something anyway.
Mm-hmm. Yeah. It's nice to have, right? It's nice to have for a rainy day. It is important to have, we call them those current assets on your balance sheet of, cash and cash equivalents that you have. And those could be, stocks, bonds, things that you can liquidate within 12 months. But if you don't have backup plans, or you don't know what you're going to do when a rainy day hits, and just like we all know in small business, every day is variable and you don't know what's coming. You could be hit with a lawsuit from a client a year ago, and then the next thing you know, you got a 6-figure bill from a lawyer that you got to deal with. Or, give you an example is we had $100,000 project that we were working on and building pools, and we screwed up on one of the materials and it cost us $14,000. That's coming directly out of the profitability of that project. But those are struggles that I think a lot of business owners go through. And to your point, you look at your P&L and your profit's always just an estimate. A lot of people don't realize that. Yeah. You can look at your profit and loss statement, great, but realistically, and I was like this, I didn't really understand that I needed to look at a separate statement, which is called your statement of cash flow, which is the second most important statement that you're going to deal with, because it reconciles how much cash you're actually keeping at the end of each period. So it's transferring that profit that you have over that statement of cash flow, and then looking at three main activities, which is your operating activities, your investing activities, and your financing activities. And that's what shows up in your bank account at the end of the month. So I talk to a lot of business owners and they've never even seen that or know what that is, but they look at their bank account and they look at their profit and they go, I don't understand. I thought I was making money. Oh.
So if someone asks their accountant for a statement of cash flow, and it's divvied out into those three buckets, what should they be looking for as a red flag? I mean, they're gonna see a number that's very different than their P&L typically, because it's the actual facts, not just an estimation. But what should they be looking for that's like, well, we gotta tighten down on some things here?
Yeah. First thing I look for is, are you generating more cash in your operating activity line on your statement of cash flow than you are in your investing activities or your financing activities? You're probably seeing a lot of things out there today of get funding or get loans for your business. And that's all well and good if you know exactly what you're going to do with that money. But any investor, any smart investor or bank is going to look at your statement of cash flow and see, are you making money through your day-to-day operations, or are you putting band-aids over problems by taking additional funding, which puts you in a high-risk category, which means you're either going to pay ridiculous interest percentages on that, or you're going to get rejected on your funding. And that's not a good space to be in.
Yeah. So that's a story I can tell without going into too much detail. I came into this with fairly good credit into business world, but not a lot of business acumen. And what I didn't understand was, funding seems great, right? A lot of the blue collar guys that I talk to are like, oh, don't ever get, investments. Then there's other people that I've seen go very far in business, and they're like, investments is what got me here. I was able to leverage things and go. And so I kind of took a middle of the road path, and I was like, well, I have this opportunity to get funding, and it would help alleviate some of the stress of growth and whatnot. But what I didn't understand is funding is just a amplifier. It either amplifies a business that's operating well, or it amplifies a business that's sinking. And we were trending a little bit towards sinking when it came to the operations side. Customers were happy, things were going great, but from an operational perspective, the business was not trending in the right direction. And so the funding actually kind of took us back a step as well. But it's a really valuable lesson. And I think one that people need to understand is funding is not bad. It's just an amplifier.
Mm-hmm. I couldn't agree with you more. And it depends on the industry that you're in too, right? Because if you're going out and buying, 7-figure assets, like, you're going to have to go out and get funding, unless you've already sold a company for 8 figures, 9 figures, whatever, and you have the cash. But even then, you're going to go out and try and leverage that, because you want to use the bank's money to generate more income, generate more equity. And the less cash you have in your bank account, I guess I would say, that isn't, deployed out and working, you could run into some problems. And the last thing you want to do is just end up saying, hey, I got to pay back $100,000 in the next 6 months, and I don't know how I'm going to do it. Yep. That's going to shift your focus from, running your business to really like getting in the trenches again, and being right in that area, probably where most of us all started out with, is I got to make sales and I got to bring in revenue, because I've got expenses that I've got to manage. Yep. And it's hard to have that stress and anxiety that's just constant. And that's what I'm hoping that we can kind of shed some light on for some business owners here, is you don't have to always go that route, but it is important that you do understand that you do have options. You just might want to evaluate more than one or two of them, because I'll quote Suits on this, right? It's like Harvey Specter will say that if somebody's holding a gun to your head, there's 147 ways to get out of it.
I've watched a few episodes. Got to get back into that. It's a very, very interesting show. How much have you watched of that one?
I have gone through all 8 seasons. I will be honest.
No way. I love it.
Yeah.
I love it. Yeah. I got hooked on it. Alyssa and I, if we're watching a show, it's typically together, and she wasn't crazy about it. So I just haven't gone back, but
well, now Netflix bought him, I think. And there was like season 9. I think it might
be restarting or something, but
yeah. Cool. That's over like the course of like 8 years though. I'll be honest.
Yeah. Lots of time to watch it now that you got the kid.
Yeah, right.
So heading back in here, you said something to me early on, which has stuck with me, and I've been slowly making progress on this. You said make friends with 3 people in business. Who are those 3 people that you recommend making friends with in business, or forming a relationship with? It's your banker, I think it was tax, and lawyer.
Mm-hmm. Yeah, lawyer, banker, CPA.
Yeah. Can you talk people through that a little bit and why this is important?
Well, all 3 of those are really important relationships that you're going to have. Your banker being one of them, because when you do need funding, or you do need like just kind of incentives to help your business out, even with like structuring your accounts, it's always good to have that relationship. And it takes time to develop that. I also tell people the last thing that you want to do is end up in a situation where your bank is going under. Lots of people talk about, hey, I'm going to do a local or regional bank. Those are just high risk plays, because I do recommend that you do have those types of relationships, but you want to have a relationship with one of the larger banks too, just in case anything fails. I mean, 2008 taught us a lot. And, even with things that have gone out with like Silicon Valley Bank, and you get a run on a bank when, they have VC guys that like Peter Thiel, who hopefully Facebook doesn't kill me for this, but he's the reason why there was a run on that bank. He pulled out his money. He got his buddies to pull out his money. And then every small business owner, and I was dating somebody at the time who was a CEO of a med device company, and she barely got millions of dollars out.
Wow.
Before they went under. And they had until midnight of one night, and a whole bunch of people lost their money. So, having that protective guard where the Fed might step in and say to Bank of America or Chase or some of the other large guys like Goldman, you want to have some sort of relationship with them. And yeah, you're going to be another number. Have a better relationship with your local or state bank so you can get funding quicker. But you really want to protect yourself on the back end there.
Yeah, it's the banker's been huge. Still working on the lawyer one. The banker and the tax relationship are the ones I've been working on the most. Mm-hmm. And the banker one, where we do cross-border work. So I'm in Canada, as many of you know. We get the money that comes in USD, convert it to Canadian. I pay a lot of my bills and team in USD, and just forming that relationship over this year, we're going to save a lot of money in transfer fees and whatnot. But little things like that you may not know until you chat with someone, because what you see online or what you see as options out there typically aren't the only options. They're just the ones that make sense to show the general public, and they're able to dive a lot deeper with you on things. He's going to bat to do several things on the financial side that will save us a lot of money in transfer fees and conversion fees alone. So it's that's a big deal.
Yeah. And that's a good point too, because, that I'll segue into, why a lawyer is important, because your corporate structure is also important. And depending on how you are paying payroll or, managing your expenses, there's probably some business owners on here that have, if you're like me, okay, you probably have multiple LLCs. I mean, I had 6 at one time, and I'm like, wow, I got to consolidate some of these. But, I have a holdings company up top. And if I have to pay payroll, I'm paying payroll out of that holdings company down into my LLCs. So my expenses are going out. I mean, I paid tens of thousands of dollars to learn this stuff, right? And so hopefully you guys can get a taste of this. But, you can save. Literally, I've had some clients say that over the next 12 months, after they've redone their corporate structure, they're going to save $60,000 in payroll taxes. That's huge for small businesses, right? And that's going directly to your bottom line. And, if you can get a zero-sum balance account for your corporation, like I have a corporation, right? Or you can do a limited partnership that sits on top of there. And I'm not a lawyer, guys, so if, talk to your lawyers about this, but it's a good question to ask. How can I benefit from a better corporate structure that, will help me with my taxes?
Can you break that down, how someone could do that? Let's say they've got a plumbing company and they want to help with your understanding. Could you break that down? Of course, again, as Josh said, this is not legal advice, but it's, hopefully to open someone's eyes into, what the questions they should be asking their lawyer.
Mm-hmm. Sure. Yeah. If you have multiple LLCs, I recommend that you do this. And, not only from a liability perspective of keeping yourself farther and farther away from any type of lawsuits, but imagine like if you got into a really serious accident. Think about it this way, right? What would you sacrifice? Would you sacrifice your brain or would you sacrifice your hand? Which one would you go for? I think the obvious answer is you sacrifice your hand.
Yeah.
Well, when you have a corporate structure that, puts you farther and farther away from any type of liability, you're protecting yourself, you're protecting your assets. But if you have to shut down one LLC, you're cutting off your hand rather than shooting yourself in the head. So that's kind of the way that I think of it, is protect my brain. And, my corporation is my brain, and then my LLCs are all underneath that, and they flow all that revenue up, and I can pay my expenses down. And there's a lot of tax advantages, which you should talk to your lawyer and you should talk to your CPA about. How do I save more on taxes in my corporate structure I don't recommend that you go to somebody that is kind of more of a rookie in this scenario. They really have to understand tax law, and I look for people who have, somewhere around 20 years plus experience, unless they're like a young gun that is like a superstar that I've talked to, some of my buddies who have referred me to that person. But that's why you want to have those, all of those relationships, save yourself some money, and ultimately, increase your bottom line, because that's what you should care about.
Yeah. Because if you're making the money, you want to be keeping the money, not just spending it in taxes and all the other things that come along with business ownership. Yeah.
It's funny. I heard this at one point, but it was somebody that said like they write the IRS writes like tax law. If you would just go and actually read the majority of it, it tells you how to save money more than it's telling you how much you're going to owe.
Crazy, right?
Yeah.
I met a guy through an agency mastermind 4 years ago. I had him on the podcast maybe 3 years ago. But he's the type of guy, to your point about tax code, when updates come out, he'll spend like the week reading it, because that's what he does. He's a tax advisor, and there's so many ways to save money, and legally, right? The tax code was written by rich people who want to keep their money.
Yeah. I want to keep my money. I know you want to keep yours, right? So but that's the benefit of being a business owner too, is you can write off a lot of your life through your business. If you're running a W-2, you don't necessarily have that opportunity.
Yeah. And so if you can structure things properly. Let's talk about ROA a little bit. That's what the title of this is. So people are expecting that a little bit, but this has been fun. I'm liking this conversation. I'm learning a couple things here too. But ROA, we talked about it briefly last week, return on assets. But we're gonna jump back into what is it, and how do you what does it mean really?
Yeah, it's how you're putting your assets to work in order to generate profit inside of your business. And it's one of the key areas that most business owners don't know, like, how am I going to like grow my business and really generate profitability? I look at several different types of equations when I'm looking at businesses in order to evaluate where we can maximize, operational efficiency, profitability, things of that nature. And when you look at your return on assets overall, that's taking into account what do you have with your current assets, so things that you can liquidate within those 12 months, but what do you also have within your fixed assets, so things that you have long-term, that could be office equipment, that could be real estate, that could be trucks, anything from a fixed asset. Property, plant, and equipment is what most people know that as. And it also takes into account what debt you have on your books. There's kind of a similarity between return on assets and return on equity, but return on assets takes debt into the equation versus return on equity that doesn't. So when I've talked to other small business owners about this, it's like, okay, have you ever run or figured out how much profit you're generating by the assets that you have in your company? And they look at me with a blank stare on my face, and I don't expect them to run that equation. But if like, hey, if I went out and I'll give you an example. If I went out and got a loan, purchased a, let's just say like a skid steer, right? Because you're renting that on a normal basis, and you're probably paying double what that is, or for that asset, versus, I've done this in the past where I've worked with a construction company. They were renting fixed assets that they could have been using or purchased and put on their balance sheet. And once we did that, they were paying $8,000 a week, when in reality, once they purchased it, they were paying $4,000. So that's an increase of $4,000 per week. So, times that over 50
plus the asset they now own.
Right. And you get to depreciate that. Exactly. So there's all sorts of tax advantages, but there's all sorts of ways that is a more complex calculation of, a discounted cash flow of figuring out what you need to generate to make that investment worth it. But if you do focus on figuring out where can I maximize, my efficiency and use of those assets, you're going to be in a much better space, especially long term.
That doesn't always mean that you should go out and buy a truck at the end of the year, does it?
No, no, but you need to understand how much money you're making from that truck or how much you should expect to make.
Yep. Yeah, I was kind of switching it to, you see a lot of people at the end of the year, they're like, well, I'm going to go buy a truck because I don't want to pay taxes. It always makes me laugh because it's like taxes is a small percentage of that.
Yeah.
Can we switch to that topic a little bit and you can kind of shed some light on that?
Sure.
From a financial and accounting perspective, but where's the flaw in that thinking when someone's like, well, I'm just going to go spend a lot of money so I don't have to pay taxes?
Well, sometimes that's a good thing, right? Sometimes you need to do that.
Yep.
But the IRS is going to look at you kind of cross-eyed if you continuously do that and you're showing like negative balances on your bottom line all the time for 5 years straight. They're just going to wonder like what's happening here, right? And the last thing you want to do is get audited. But there are things that you can do that are, of tax benefit. I'm not a CPA, but I do know there's areas that you can, spend money to, get write-offs on, like business coaching, consulting, purchasing, or what does your depreciation look like on those assets? If you're buying a truck, they're normally going to have a useful life of 5 years inside your business. So you're going to really have a straight line depreciation on that. But if you have opportunities to go out and say buy real estate, and you can do accelerated depreciation on some of the assets that you have in there, like your gutters or anything that isn't routine maintenance, that's a way that a lot of real estate guys actually make money in real estate and avoid paying taxes, because they can do that accelerated depreciation. So you really want to talk to your CPA about it. But anybody who's working with you from a financials perspective should be able to go into your financials, into your assets, and see, hey, what's sitting in your balance sheet, and where can we maximize the opportunity for you to keep your money?
How should someone go about finding a CPA? Because that's something we harped on here. I think it's something that most people just find someone to file their taxes. And they don't have someone that's actually there's a lot of crappy CPAs out there. But what are some questions that they should be asking to vet their CPA that they're currently working with, or to find one? Because I'm sure you've been through your fair share of CPAs that don't really cut the muffin.
I have. I put in a standard operating procedure of I interview at least 3 people when I'm looking at vendors or any relationships that I'm going to work with long term. CPAs are very important. They are buried in their work in the beginning of the year. So good luck getting a hold of them like 2 months before tax time. But I also tell people focus on the relationship. That's why you want to go out and look at 3 opportunities and 3 different people, because if you're not going to get along with them, why are you going to sit there and just like shell over what the most important thing is for you is, your taxes and your bank accounts to somebody who is a ghost or can't communicate with you properly? And there's some really cool CPAs out there, and there are not so cool CPAs. What I've always found when I've had successful relationships with CPAs is they're bringing something to the table and already letting me know, hey, I think that we can save you money here, here, and here by doing these couple of steps. And I look for that.
Not just, oh, let me look and then we'll go. But, based on the conversation, I think here's where you might be able to save if we can dig a little deeper.
Mm-hmm. Yeah. And scenarios, right? Come with a scenario, come with questions. Ask the same questions to a couple different people.
What's an example of having a good relationship with a CPA, whether it's you or clients, that, it was like a massive savings? Because I think that drives the point home, I think, for people here.
Well, one, you need to make sure that unless you're a restaurant or doing a lot of transactions, you should be on accrual accounting. There are a lot of CPAs out there that will do cash-based accounting for you. And I'm going to tell you right now, you are going to shoot yourself in the foot if you are doing that. And you're not taking credit card swipes at a cash register or something like that. Because accrual accounting is so important for you to even out what your financials look like.
Can you explain what that is? Like, back up a little bit and explain what accrual versus cash is.
Mm-hmm. Cash accounting is ultimately cash in, cash out. Okay. You have cash coming in, you have cash going out. They just look at that for a specific period. Accrual accounting is you're actually recognizing your revenue and your expenses for the time period when you're doing that work. So construction is a great example. Lots of times construction guys will take upfront payments for projects that are going to happen because they're over like a 3 or 4 month period. But if you're on cash-based accounting, what you're going to do is you're going to pay taxes on that upfront deposit instead of recognizing it when the work comes in, which means your buying power is going to go down. Say if you have to go buy a bunch of materials and you're getting a $30,000 payment, but you got to pay 20% on that, you're going to have to pay that in taxes instead of going out buying your materials when you need them and then recognizing the revenue of when the jobs are getting done. And it is a little bit more of a process for any business owner, but it's super important that you do that because it also gives you more of an accurate picture of what's happening inside your business. And what do you need to go do? And do you need to go out and sell more? Do you need to look at, your operating expenses and, decreasing, what's happening inside of your business and what you're spending money on? Those are the types of decisions that accrual accounting can really help you with. And it'll also show you, the peaks and valleys of, your revenue and expense cycles, which banks hate seeing large spikes and then valleys. They want to see more of like an even.
They want to see the average. What's your average that you're actually bringing in, not just this fluke one that came through.
Yeah.
Josh, another awesome session. This has been fun.
Cool. Good. I love it, man. I hope this is helpful for people out there.
Yeah, this has been good. I tagged people. I know we're hitting people in the workday, so we'll get some people trickling in watching it. Guys, if you watch through, leave a comment. Leave questions here, and we'll tackle them. We'll be here, for several more weeks, and just kind of having fireside chats about financials. It's not the scary. They are scary if you don't know what's going on, because you're like, I'm making a ton of money and not taking any home. But they don't have to be scary. And I think the biggest takeaway from today that I'd love for people to really grab onto is find yourself a good banker and CPA relationship, because that helps you break down where you could be saving thousands of dollars. And
a tax lawyer. If you can, grab a tax lawyer. Yeah, those are really, really important too. Yeah, those 3 relationships right there.
Love it. Awesome, guys. Appreciate you guys tuning in, watching this in the replay if you are, and we'll be back next week. Cheers.
Thanks, Lewis. Thanks, guys.